2024 has come to an end, and January of a new year is always a great time to reflect on what was great, what wasn't, and with that, I'll also break down what are my investment plans for 2025. I have my notes and numbers here. I hope that as I share with you the reflections of my journey, it will help you in one way or another. But before we begin, some necessary disclaimers. I still consider myself as a beginner when it comes to investing. Nothing that I say should be taken as financial advice. Please go and do your own research. I'm purely just sharing and documenting the journey. So I started my investment journey in November 2022, and as a beginner, the mindset I had was to regularly dollar cost average into the S&P 500 with $300 a month, and with my cash savings, slowly build up a dividend portfolio with Singapore REITs. Why dividend investing in my 20s, you might ask? I remember when I first started receiving semi-annual coupons from the bonds that I invested into at the age of 18, documented in this video right over here. It felt similar to earning a monthly salary. It was a stark contrast as compared to investing into the S&P 500, where the gains you see are only visible through your phone via a percentage amount if you open up your investment app. So I thought maybe investing into Singapore REITs would be something I wanted for myself, as most of them pay out quarterly dividends. Another reason was that I didn't want to spend my time analyzing the stock market frequently, and you would think because of that reason I would choose a managed portfolio, but nope, I decided to invest into a selection of top REITs on my own after some research, as I didn't want to hold some of the stocks in that managed portfolio. So I made occasional purchases, focusing on building the portfolio size without the constant monitoring, but little did I know that I was wrong. Anyway, that mindset carried me through 2023, and midway through 2024, I started to waver. After not checking the app for extended periods of time, I discovered once I opened it, my holdings had dropped and I had missed opportunities to buy at lower prices. Even as I'm speaking right now, my portfolio is in the red, which I'll show you a little bit later. But what exactly did I buy in 2024? If you take a look at this table on screen, I consolidated it from January all the way until December. I bought Mapletree Pan Asia Commercial Trust, DBS, Capital Land Integrated Commercial Trust, Fraser Centrepoint Trust. Mainly these 4 stocks, and these are the units and the price that I bought at as well. So if you are a REIT investor, you would know that most of them are way below the price that I bought in back then. This table on screen right now is my overall Singapore stock portfolio in 2024. The REITs are in the red and my bank stocks and Keppel is in the green. So net after offsetting the unrealized losses and gains, I'm actually overall up $4,000. All thanks to DBS Bank and UOB Bank. They are the carriers of all of my Singapore stock portfolio. But anyways, there are also dividends that I've received, and based on the units that I'm holding and the dividends per unit for 2024, I'm expecting anywhere between $2,000 plus from the REITs that I'm holding in 2025. I just want to add that I did switch investment platforms. If you watched that video when I first started investing, it was on SiveTrade for both US and Singapore stocks. But later on, I moved my US holdings to Interactive Brokers. And for Singapore stock, I liquidated and bought in Moomoo Singapore's app because they were offering 1-year commission-free trades in the Singapore stock market for new users, which is still ongoing right now as well. So all I needed to pay was the platform fees of a minimum 99 cents per order plus the SGX fees. And it was cheaper than other platforms out there at that point of time. Takeaways and what is going to change in 2025. Number 1, I'm going to be holding on to the existing REITs until it recovers while collecting the dividends as shown in the table earlier. Number 2, I will not be averaging down at current prices. But if ever due to interest rate environment and the stock prices falls, REITs take a huge hit again, I will accumulate some more. Number 3, I will accumulate more bank stocks gradually when I have the capital. Back in September, I also updated in the Money Diaries series that I decided to reinvest the dividends by setting up a regular savings plan on Moomoo Singapore's platform, where most of my Singapore stocks are at. The reason for this shift is that Singapore stocks can only be bought in increments of 100 shares, and I wasn't keen on accumulating more REITs. So with that RSP set up, it will automatically deduct from my bank account and make the purchase on a dedicated date. So since then, for this regular savings plan, the total amount that I've placed in $700 $100, and right now, as of filming this on the 14th of January, I'm up 2.27%. It's going to continue all the way until the dividends that I received and collected since 2023 runs dry. If you're like me, you want a hands-off approach to investing into the US stock market, you can set up a regular savings plan and start investing on Moomoo Singapore's platform from as little as $10 with no commission fees and a platform fee of 99 cents per order. New users right now can get up to $3,154 with their Chinese New Year sign-up promo, and because I'm a partner with them, with my exclusive link below, you're getting an additional $20 when you deposit $100 and complete one buy trade. Stacking on, if you manage to deposit the following amounts cumulatively, complete the respective buy trades, you can get up to one entire Tesla stock, which is worth a little over $467 right now. There's the Chinese New Year Sure Win Ang Pao, where you can get up to $888 as well. A step-by-step guide to the full new user sign-up rewards can be found on my website. I'll put a link down in the description box below. So this is for Singapore stock investments. Let's move on to US investments. For US, it's mainly the S&P 500. The mindset was pretty simple. Number one, I don't want to have to actively manage this investment. Number two, I set it up, forget about it, let dollar cost averaging and compounding do its magic. And number three, I was only going to touch this portfolio when I'm in my 40s or 50s, and that's about a 20 to 25 year time horizon. Earlier, when I mentioned that I switched from VU to CSPX, the exact date that I sold VU was 28th of May 2024 after 18 months of investing, and I realized a net 20% gain then. For a more detailed breakdown of what happened, refer to this video, which I'll link up above and down in the description box below. When I switch over, I'm just gonna take it like I restarted my dollar cost averaging journey. I started with USD $800 a month for 3 months, and then I increased it to $1,000 a month with some lump sum purchases here and there. So as of 14th of January 2025, that's the date of today, my capital invested is a little over $11,000. Unrealized gain is $304, and in percentage, that's 2.68%. So this is for S&P 500. There are also other individual stocks that I purchased using this bucket called learning money. I set aside about SGD $10,000 for it, as I wanted to try to invest into individual stocks based on what I learned myself. Whether this will continue in 2025 or not depends on how my schedule is. I don't particularly enjoy doing it, but it was something that piqued my curiosity. As of right now, these two individual stocks, it's up 12.48% and 2.4%. So takeaways and what's going to change for 2025 for my US investments, nothing is changing. I'm going to continue dollar cost averaging into the S&P 500, and if I have any spare cash, then I will do lump sum investments as and when. For my 2025 net worth video, if you have not caught that, I'll link that up above and down in the description box below. You can tell that I have about 20% in liquid cash, 48% invested, and in fact, it's a little more than that with my CPF OA recently invested as well. I'll touch on CPF in another video, so if you want to hear more about that, make sure you subscribe and follow along. If an opportunity arises, I will deploy, but I'm comfortable with having about 20% as cash, and nobody can tell me otherwise. It's a lot of money. $68,000 kept as cash, it's a lot. But one thing I learned from the book The Psychology of Money by Morgan Housel, life-changing by the way, highly recommend for anyone who is new to investing. No, not just new to investing, just personal finance in general. If you're new, go and read that book. It really changed my life and how I view investing, money management, etc. But anyway, he says that investment returns can make you rich, but whether an investing strategy will work and how long will it work for, and whether markets will cooperate is always in doubt. Results are shrouded in uncertainty. Personal savings and frugality are parts of the money equation that are more in your control and have a 100% chance of being as effective in the future as they are today. I have to plan for a plan not going according to plan. Investing is never guaranteed. I wouldn't know what worked in the past 50 to 100 years would continue to work until the age I retire. So having about 20 to 30% cash buffer of my net worth that will continue to grow as I work and churn out more income, if anything, by the time I retire, that 20 to 30% should be enough for me to go to bed at night, to have a comfortable night's rest. It's what you're comfortable with, and nobody can tell you otherwise. So that's my review of my 2024 investments and my takeaways and what's going to change in 2025. If this video has helped you in one way or another, let me know down in the comment section below, or you can direct message me on Instagram. If you have any feedback, I welcome it as well. Any questions? My Instagram DMs is always open, or leave it down in the comment section below, and I'll catch you guys in my next video. Have a great week ahead, and I'll see you guys. Bye bye.